Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Aneko from the Maneko64 YouTube channel. Mario, thank you so much for joining us today.
You're welcome, Elijah. Thank you for having me on again.
Well, it's great to have you. A great day to have you on. As we see gold surpassing 3,400 this morning on Monday, April 21st. Your perspective on what's going on here?
Well, I mean, it's a combination of many things. I think ultimately it's just reflecting the currency debasement that we've had for almost 25 years. I always remember the speech Ben Bernanke gave back in 2002, November 2002. It was the helicopter speech. At the time, he wasn't the chairman of the Federal Reserve, but he was being groomed to take over Alan Greenspan, and he said we're never going to allow deflation to happen again because we've got this technology called the printing press where we can just create dollars at no cost. And that Elijah, was what really woke me up to the fact that I needed to have silver and gold and silver, and keep adding on to it, and nothing's changed. The only thing that's happening now is that I think the world is waking up to it, especially sovereign nations and their central banks, and they've been buying real physical gold for the last 3-4 years, and it looks like even the United States might be repatriating all the gold that it's probably leased through the bullion banks. I mean, yesterday, I think President Trump made a comment on Truth Social. He said that when you're negotiating, if you have gold, you can call the shots. So that's what I'm assuming. But does he know, though, that China probably has a lot more gold in the U.S., and that's if the U.S. has those 8,130 tons. And that's why I think the price is going higher. Some would call it, of course, the dollar going lower. And it's not just a dollar problem. It's a British pound problem, a euro problem. It's a problem for all fiat currencies. I spoke about this in my video today. You can't let the dollar index distract you, because ultimately all fiat currencies are going to sink to the bottom versus gold. So that's what I think is happening. I guess silver still has to catch up. It's quite frustrating that we're seeing silver not really go up a lot quicker, but I think we just need to have patience.
It is crazy. The gold silver ratio we're seeing, around 103 right now. We really haven't been at these levels since 2020, and before then, really never in human history. So some people think, and myself included, think it might be a good opportunity to swap gold for silver. But, who knows how high this ratio could go before silver catches up here. I did want to ask about another ratio that you've been touching on, which is the Dow Gold Ratio. And you think it's going to go to parity, 1-to-1. So I wanted to get your perspective on that. And as we're talking right now, the Dow is falling again. The stock market is selling off. It looks like we might be approaching, new lows in this a crash. Was it 2 weeks ago? We saw the huge increase, the huge recovery when Trump said, 90 days we're going to hold off on some of these tariffs. But it seems like most of that gain is gone, and potentially all of it soon.
Yeah, the Dow Gold Ratio, I think, yes, it could go to at least 1-to-1. If you look back at the early 30s and then 1980, we had the Dow Gold Ratio go down to 2, roughly, in 1932 or 33. And then in 1980, it went 1-to-1. Gold was 850. The Dow was at 850. So we could even have that ratio going like less than 1, which would mean, for example, you could buy 1 Dow with half an ounce of gold. And yes, we reached like over 40 in late 1999, and it's never retouched or retouched that level. And recently, I noticed that it's broken down, and today especially, I think the handle is 11. For the last 5, 6 years, it had been trading around 20. So I'm not saying it's going to go straight to 1 in the next few weeks or months. I think it will take a little longer, maybe a year or two. But it's definitely broken down, and it proves that we're probably not really going to have what we saw. I think we already had the correction in gold. I think the event you talked about when the Dow, NASDAQ, and S&P dropped sharply, and then Trump reversed the reciprocal tariffs for 90 days. We saw that huge rally. So before that rally, gold had taken a hit, and silver, and they rebounded very quickly. I think this is it now, because as we speak here, I'll just have a look. The Dow is down 980 points and gold is up 86. Even silver, which is being kept suppressed by the bullion banks, is up 10 cents. I mean, it was up a lot more earlier, but yeah, so that's the way I see it. The Dow Gold Ratio, that's an important one as well. And it's not only me who sees that. It's like people like Pierre Lassonde. He thinks is going back to 1-to-1.
No, we're at the stage in the gold market, at least I'm feeling this, where it seems like, you can't go down, you can only go up. And I get that sense from a lot of people that there's this sense of, oh, well, I need to buy now so that, because it's only going to be higher later. But whenever I get that feeling, and whenever there's that sense out there that things can only go higher, I think that's a little bit of some alarm bells for me, realizing that no, pullbacks happen, right? So your perspective on that, do you see a pullback coming in the near future? And for those looking to add to their positions, maybe, do you think that, waiting for a pullback might be prudent?
Yeah, I guess it depends, like where you are and how the, let's say, the precious metals retail market is where you live. But I do expect pullbacks. Markets never go up in a straight line. But I think gold and silver and commodities in general, they're going to become more like the stock market has been for the last, 40 years. People always buy the dip. It's going to be the same thing for gold, silver, the miners. And yes, if you have the chance to add on to gold and silver, if we see a pullback, you should add on, but beware that they're going to be quick and sharp, these pullbacks, and your dealer might not even have a very good price. He might even have, or she might have, a premium for you to pay. Yeah, and I mean, trading is different, of course, because some people leverage trading. I don't really recommend trading gold and silver, because I think what it's reflecting is the system breaking down, the currency system breaking down, and the emotion that we have for gold right now might be a bit greed, but I think when fear kicks in as well, when people realize that their fiat currencies, be it the dollar, the pound, the euro, the Australian dollar, or whatever, when they realize that these currencies are becoming worth less and less, they're going to try to jump into gold. And I think right now it's still the wholesale market that's jumping into gold. Central banks and sovereign nations and big money is jumping into gold. I think the smart money.
Yeah, and that's what we've been seeing for months now is, not a huge amount of retail demand at all, but it seems like the big players are buying, which in some sense, I mean, obviously there can be a pullback, but there's also that signal that it's not the common man that's jumping in yet, which doesn't, I mean, there can be a pullback, but there's not signs that this is like a blow off top in some sense, or this is the end of the bull market.
Yeah, I think the only way the gold bull market could be reversed would be for central banks to act together and say one day all the central banks start raising rates aggressively, stop QE, and also governments getting together and saying we're not going to spend anymore, no deficit spending. But I can't see that happening. We saw the ECB cut rates last week. We're seeing President Trump criticizing the chairman of the Federal Reserve, calling him too late, Jerome, or whatever, that he needs to cut rates. We're seeing the markets discount several rate cuts already. So, yeah, I don't see any end in sight. And eventually, I think the public and investors are going to wake up and realize that there's no end to the inflation. And that's what Ludwig von Mises called the moment where the crack-up boom, or the flight to hard assets or hyperinflation, that's when it starts. And when it starts, if you're not protected, if you haven't protected your assets with or your wealth with hard assets like gold, silver, it will be too late. So that's why I don't think it pays to be too cute for wait for pullbacks right now in gold and silver. I would just say if you're fortunate enough to have spare fiat currency savings and you're looking to buy gold and silver, do it. And I wouldn't sell my gold to buy silver. I would just buy both. Maybe if you favor silver, buy a bit more silver.
No, when it comes to Trump and the Federal Reserve right now, your perspective on that, I mean, a lot of what's happening in the market seem to have been triggered by Trump, talking about the tariffs and maybe Trump's personality of being a bit unpredictable here. So there's a lot of uncertainty, more fear entering the markets here. Your perspective on that, could anything happen? Could in some way Trump actually influence or the Federal Reserve policy, or even fire Powell in this case?
Well, he could definitely influence Powell, because if Powell doesn't want to leave, I think he's got till next year. But if Trump puts a lot of pressure on him, he could find some excuse by the next meeting, sometime in May, the next meeting, to cut, and that would shut Trump up, so to speak. He would probably placate Trump. So yeah, and the mainstream financial press, the mainstream economists, they think that pressuring Powell is like putting the independence of the Fed in jeopardy and its credibility. But personally, I think it's the same way you think. I don't think the Fed has any credibility, because the dollar's lost over 99% of its value since it was created in 1913. All the Fed really does is bail out big Wall Street banks when they need to be bailed out. And when these banks make huge profits, they keep their profits. The Fed is just there to make sure the top 1% keeps getting wealthier. So that's how I see it. But I'm not sure Trump wants to abolish the Fed, maybe like President Jackson did back in 1836 by not renewing the charter for the Second Bank of the United States. Maybe he just wants more control of the central bank. And will he really tighten? I don't think he's going to tighten policy. So whatever happens, I think it's bullish for gold and hard assets.
You mentioned the dollar losing 98% of its value, and I think that's really important to remember. And I guess it's, 99% if you compare it to gold, or even more than that, since the Fed was implemented, right? Gold was $20 an ounce at that time. Now it's, over, 3,400. So more than 99% of its value has been lost compared to gold. When we look at the dollar index, though, right, it's kind of like you're seeing it's just the dollar compared to other currencies. So, they're all falling, but the dollar is either falling less or more. But I did want to get your perspective on what do you think the significance of this is? We're seeing the dollar index under 100. It's about down a percent today, about 98. So your perspective on what we're seeing at the moment.
Yeah, I guess in the short term, it does help gold go up versus the dollar. But if you look at the price of gold in euros and pounds and yen, that's still really high as well, and it's made a new all-time high versus the pound today. And if you look at the dollar index historically, it was an index created in 1973 to measure the dollar versus the major Western currencies, because up until 1973, Elijah, all currencies were had a fixed rate versus the dollar, and the dollar was fixed versus gold. But yeah, it started out at 100 in 1973, and we're around 98 right now, so it's lost 2% in 52 years. While gold, I think, was 85 when the dollar index started trading. So I think, yes, in the short term, it does impact gold. But I think overall, I think it's a huge distraction because it's measuring fiat currencies against each other. And we know, Elijah, that they all end up going to zero. And even if you look back at 2008, when the dollar index bottomed just above 70, gold was at 1,000. And here we are almost at 100, and gold is at 3,400. So yeah, that's how I see the dollar index.
The 100 level in the DXY is significant. Do you see that we could potentially see a decline in the dollar further from here relative to other currencies?
Yeah, definitely. It could still go lower. One thing that might happen as well, because if you think about the system, the Bretton Woods system, that was kind of appended or kind of wrecked by President Nixon and his advisors in 1971, and then they started this dollar index at 100. So there's been a lot of talk of a monetary conference or coordinating the world monetary system, so they could actually negotiate while the dollar index is at 100, because that would be the same level that it was 52 years ago when the whole system imploded. So they could use that as like, we're going to negotiate from here. And but we could go a lot lower. But especially if the Fed starts cutting rates.
With respect to this idea of a monetary realignment, it seems like from some of our officials, we're hearing this kind of thing. And at the beginning, a little bit before the beginning of the Trump administration, the gold price was way down. So it wasn't way down. It's a lot higher than when we started the Trump administration. So do you think any of this rise in the gold price has to do with this idea that maybe gold will be playing a role in the system in the future?
Definitely. Besant, he did an interview before the election, and it's on YouTube, and he told the guy who interviewed him that he sees a Bretton Woods-like realignment. And notice how they focused, all the focus was on cryptocurrencies, Bitcoin reserves, or gold, Bitcoin-backed dollar. They never mentioned gold. But what Trump said yesterday about needing gold to sit down at the table to negotiate and calling the shots, I think that's a huge signal that you and I value, but the general public has no clue what it means. And so, yeah, I think definitely gold will be part of a new monetary realignment. It always has been historically when systems collapse, especially fiat currency systems collapse. And I think that's why the world's been buying gold hand over fist for the last 3.5, 4 years. And that's why all the physical gold is going into the U.S. The people in the know, the elite, the top 0.1%, if you want to call them, they know what's coming. So they're, and Trump knows that he needs the gold to sit down at the table with Xi, the Europeans, and also with the Russians. So, yeah, I do definitely see gold coming back, because having the dollar, the paper dollar, as the major reserve currency will only make the trade situation worse because of Triffin's dilemma. And Triffin's dilemma says that if you have a fiat currency that's the major reserve currency, then all countries are going to try to earn that fiat currency. They're going to try to sell their goods and services to you, and that country will always have a current account in the trade deficit. But with gold is neutral, so gold is apolitical. So I think we definitely need gold, and I think the Trump administration and the rest of the world realize that.
Now, when it comes to, I guess, the kind of bull market we're in for gold right now, I mean, we can look back at the 70s and how gold went up multiples during that bull market. We see, in the 2000 to 2011 bull market, gold went up multiples. But do you think this is kind of a different animal in some respect, because there's associated with this monetary realignment, or, as you've mentioned, kind of the failing of these fiat currencies?
Yeah, I mean, if you look back at 1970 and then the 80s, gold started out from 35. It went up to almost 900 in January of 1980. And then it never went back there again up until after the year 2000. And it was basically trading in a band like between 300 and 500, around 400. It was only in the mid-90s that it dropped below 300 and went to 250. So you could argue that de facto we had like a reset from like 35 to 350. So it's like 10 times. And then, yes, from 2001 or 2000 to 2011, we went from 250 to 1900. And then we saw it dropped quite a bit, back down to just above 1,000. And it's only recently that we've been able to break definitively above 1,900 and 2,000. And I think, yeah, we could definitely see like an 8-fold increase from 1,000, which would give us 8,000, or maybe even higher. And I think this time, because of the debt situation, the size of government, I'm not sure we're going to correct as much, and I think they might have to keep the price at that high level. It might never correct back as much as it did, let's say, from 1980 and from 2011. And I think the late Jim Sinclair always said that the next time we have a reset, it's going to stay up there, because it's the only way to reliquify the system.
And I guess those high numbers for gold, 8,000, 10,000, some people have talked about, or even higher, don't seem too crazy now, as we're looking at, $3,400 gold as we speak. So before I let you go, Mario, if people are interested in continuing to track this with you, where can they go?
Yeah, my YouTube channel is @Maneko64, and I post a video there every day. And I'm also on X @Maneko1964. Yes.
Fantastic. Any last thoughts before I let you go, Mario?
Patience, and also the old saying by Jesse Livermore, be right and sit tight. Yeah, don't listen to the people who don't have any gold and keep saying, oh, you need to get out, it's going to crash.
Fantastic. Well, Mario, really appreciate your time today, as always. Thank you so much, and happy Easter.
Thank you.